I'm David Westin from Bloomberg, and it's my great pleasure now to welcome the former Secretary of the Treasury. He is Steven Mnuchin. So, Mr. Secretary, thank you for joining us today. You were the steward for the U.S. economy for 4 years under President Trump. Give us your read right now on where the U.S. economy is, and for that matter, the global economy. Are we fully rebounding from that substantial downturn as a result of the pandemic?
Well, let me just put this in perspective and first say I'm very proud of the work we did with Congress last year, passing very strong bipartisan legislation. The CARES Act passed 96-0 and 100-0. And had we not done that and worked closely with the Fed, I think we would have had a global depression, not recession. Now, with the advent of vaccines being distributed and at large scale and a better understanding of the disease, I think you're seeing the economies opening up, and you're going to see very, very strong growth rates, particularly in the U.S., but also in other areas of the world.
What risks are there to that projection in your view? And let me name one specifically here in the United States. That's the labor markets. We seem to be having a very difficult time matching up the people looking for jobs who've lost jobs through the pandemic with the jobs that are remaining open, because the JOLTS numbers, as you know, are very, very high, record highs.
Well, there's no question that there are areas of the economy, particularly in hospitality and travel, where they now are reopening and they're having a difficult time hiring people. I believe part of the impact, not the entire impact, but a significant part of the impact, are the programs that we put in place during the pandemic were intended when the economy was closed. And now as the economy opens up, we need to see those various different programs roll off. I think the other area we're seeing is we need better job training. There's areas where there's more people looking for jobs and not necessarily the right training in those areas. So I think those are two areas we need to focus on tremendously.
There's a great deal of talk, as you know, Mr. Secretary, with the so-called K-shaped recovery, that some people are doing very, very well, much better than they were. Some people are really being left behind. Does that pose potentially a risk for the overall growth of the economy, quite apart from some of the distributional issues and maybe moral issues?
Well, it clearly does. I mean, you see this both within the U.S. economy. There are certain companies, such as online retailers, that had record years, even through the pandemic. There's other companies, such as travel and leisure, that were completely shut down and had to take on excessive debt. So I think you see that both within the U.S. and then more broadly, you see the richer economies performing better as they had large fiscal response and vaccine distribution, and the poorer countries having more difficult issues. And that's something we'll all need to help on.
Mr. Secretary, one of the things that you focused on as Secretary of Treasury, as well as President Trump focused on, was the trend line for growth. You were concerned that it had really fallen down to 2% and even south of 2%. You got it under the Trump administration up close to 3%, although it was coming back down even before the pandemic. Where do you see the trend line right now for U.S. economic growth in light of the pandemic? Does the pandemic change that trend line up or down?
Well, I think the economic programs that we put in, which were a combination of the Tax Act, regulatory, and trade deals, really helped the economy grow. I think now one of the issues is there's a lot of uncertainty in the United States around what's going to happen in tax, what's going to happen in infrastructure. So I would encourage the leaders to work on a bipartisan basis to pass additional legislation and take those risks out of the economy so that people know how the economy is going to react and what the different regulatory and tax policies will be, which clearly will impact different businesses significantly.
So let's take those as you raise them. Infrastructure and tax. Infrastructure first. As you know, there's negotiations going on right now in Washington to see if the bipartisan approach can be delivered. What do you think is the right answer for infrastructure at this point for the United States?
Well, I think infrastructure is something that's very important. Actually, this is something that President Trump campaigned on as well, and we wanted to get done. We ended up having a lot of other priorities, so we had difficulty passing this. But just as last year, both parties came together to pass the CARES Act, I would encourage the parties to come together, something that looks like around $1 trillion, as I know what the bipartisan group has been working on. And I think that can have a real positive impact on the economy. So I'm a big fan of bipartisan work in that area. And I would be very careful, particularly as we grow the economy and people are trying to get back to work and small businesses are opening up, what could be significant tax increases across the board.
Well, and the tax increases really is the rub, isn't it? Because watching from the outside, at least, with the various meetings that President Trump had up at the White House, the infrastructure weeks that were had, it always got down to, I think, how do you pay for it? Not just how big is it, but how do you pay for it? Is it essential that you not raise income taxes in any way, shape, or form, corporate or individual, in order to make the infrastructure work?
I think it can be done. There's a lot of money left from the pandemic funds last year. We passed over $6 trillion of funds. There's still significant money that hasn't been used. I believe that can be recycled. And I think the bipartisan group can look for, across the board, there may be some pay-fors that don't have significant impact on the economy.
Is that use taxes?
Excuse me?
Would that be use taxes, for example? That's one of the things being suggested is pay for. That's not income tax, but a use tax.
I'm not going to comment on the specifics of whether it's gas taxes or other, because I'm going to let the bipartisan group figure that out. Almost by definition, it's the areas that people can agree on. But I'm hopeful that that will get done. I think it's been moving in the right direction, and I'm hopeful.
So, Mr. Secretary, give us, if you can, a rough sensitivity analysis on the question of the trend line growth, because you said it depends critically on investment in things like infrastructure and tax policy, which seem to be linked up. What's the upper level? What's the lower level, depending on what they do there? What do you expect in terms of trend line growth for the United States over the next 5 years?
Well, I can't comment on 5 years, but I would say clearly in the foreseeable future, I mean, we could easily see 6 to 8% growth. I think the other area, and the previous panel commented on this, is the risk of inflation and how that plays out. Now, inflation is good for certain parts of the economy and very bad for other parts of the economy. So I do worry, as Larry Summers and others have said, that the chances are higher as opposed to lower, that this is ongoing inflation and that the Fed will need to adjust for that. I think in the interim, there'll be businesses that are growth businesses, high margin businesses with consumer spending that will do very well with higher inflation, and businesses with lower margins and high costs of labor are going to be concerned. So I think the inflation outlook is something that's going to need to be managed very carefully.
Well, let's talk about managing it carefully, because it appears that the Fed is coming around to the view that at least has to be concerned about inflation. That's what we heard from the Fed after the FOMC meeting. We heard Chair Jay Powell say we're paying attention now to inflation, even though they didn't take specific action. Do you think that what the Fed is doing, basically in indicating down the road they're going to have to tighten some, do you think that that's going to be enough to rein in the danger of inflation?
Well, I have a lot of confidence in Chair Powell, and we worked obviously very closely over the last several years. Clearly, what the Fed did last year during the pandemic really helped, and it was critical. So there's no question that the Fed needs to go into a period of normalizing rates and normalizing the portfolio. And I think the question is really how quickly they do that and how they do that in an effort to control inflation. I think the issue is that the Fed is being cautious. The Fed models, the Treasury models, economic models really are not very good at predicting, given the vast amount of fiscal and monetary response we had over the last year. So I think this is something that needs to be watched very carefully. And I do think the markets are underestimating this risk.
Well, it does raise the broader question, at least for me, of how much of the growth we're seeing right now, because as you say, Mr. Secretary, we're going to see some robust growth this year in all likelihood. How much of that is because of the fiscal and monetary support as opposed to the underlying strength of the economy?
Well, I think a large part of that is going to be the fiscal and monetary that allowed for the reopening of the economy. So again, I just want to put this in perspective. Over a year ago, I never thought I'd be in a period of time sitting in an Oval Office talking about shutting down travel to Europe, talking about shutting down the entire economy. So there's no question that now that it's reopened, and now that, at least in the U.S., there's vast vaccine distribution, you're seeing businesses come back very strong. And I believe in particular the travel, entertainment, leisure business, people like these videos, but people want to get back out and travel and see people.
Yeah, I think that's very fair. You talked about some of the things that you did in the Trump administration, you and President Trump did, to really spur growth, and it certainly included tax cuts as well as regulatory reform. On the other hand, President Trump from the beginning took a very strong line with China, which, by the way, President Biden seems to be following up on. Looking back at it now, did you leave some growth on the table because of the need to be tough on China?
Well, I can't specifically say whether we did or whether we didn't. What I will say is that China is the second largest economy in the world. It has a large population, 1.3 billion. It's both the biggest opportunity and the biggest threat, with a large growing middle class. And the purpose of the tariffs were really to create a level playing field. So the issues that we were dealing with were the same issues that my predecessors were dealing with, Hank Paulson and others. And there's no question that the tariffs had the desired impact of getting China to the negotiating table. We made a lot of progress on the phase one trade deal. I would encourage the Biden administration to continue that work and try to have China make more reforms on trade and play by the global rules. I think that's important for their economy and very important for the rest of the world economy as well.
As the Biden administration does apparently turn from Europe to Asia, and particularly China, is it a zero-sum game? I mean, in the sense that in order to really get China to the bargaining table and get real concessions, you have to run the risk of giving up some growth.
Well, I don't think it's a zero-sum game. China, they were at the bargaining table. We made significant progress. I would encourage people to get back to the bargaining table, and let's see if they can get a phase two deal done. That's really the purpose. This was about protecting intellectual property, protecting fair and free trade, and having two-way trade. A major component, we believed, of the deficit was that our companies didn't have the same opportunities to participate in China as their companies had in the U.S.
And finally, Mr. Secretary, I really want to turn to what you're doing now, because I understand you were putting together a fund for investment that involves sort of, if I can put it this way, a public-private partnership in a sense, public-government experience with private investment. Tell me what you're doing.
Well, David, I'm very focused on the work that I did over the last 4 years, both on national security and regulatory areas. Very focused on technology such as cybersecurity and data privacy. I think, as we've seen in recent events, these are very important areas of national security and economic security, and also in fintech and financials, where we see really the U.S. systems continuing to advance significantly.
So some of the issues we've seen, for example, with some of the ransomware attacks, are real challenges. Do you see investment opportunities there, and what do those investment opportunities look like?
Well, David, when I was at Treasury, I was responsible for cybersecurity for all of the financial services industry, as well as for the IRS, which is obviously a very large holder. And we did a lot of work on modernization. We did a lot of preparation. The financial services industry has invested significant amounts of money in these areas. I think other areas of the U.S. economy need to continue to invest as well. And this is going to be an ongoing issue that's not a 1 or 2 year issue, but in my opinion, a 10-year issue.
Let me ask you something that I know you know a lot about, and that's blockchain, and for that matter, cryptocurrency. Is that a help or a hindrance in dealing with some of the security issues we have?
Well, I think the underlying technology of blockchain has huge potential, particularly for things like real-time payment processing, cross-border, using stable coins. My views, and we did a lot of work at Treasury on this on an interagency basis. We put out regulations last year around making sure that if you want to buy cryptocurrencies, that it has to be transparent. And I believe that many of those industries should be in the regulated world. They should follow the same BSA, the Bank Secrecy Act requirements, know your customer requirements, and these shouldn't be the equivalent of secret Swiss-numbered bank accounts. So as long as we do a lot of work, and that was being done at the G7 and G20 as well, I think the idea is to make sure we crack down on financial terrorism so it can't be used for ransom attacks and other illicit activities.
Finally, Mr. Secretary, in a word or two, should we have a central bank digital currency? I know China's working on one.
Well, I think that's something that the Fed is looking at. I know at least when I was there, both the Treasury and the Fed hadn't made any long-term decisions. I think it's a complicated issue, but I don't think it's a short-term issue. So I encourage the Fed to continue to look at these issues so that they have those capabilities. The more important issue is probably the real-time payment processing systems that both private industry as well as the Fed are working on right now.
Okay, Mr. Secretary, I can't thank you enough for being with us. Real pleasure to talk to you. That's Steven Mnuchin, former Treasury Secretary.